Good afternoon and welcome to BizTech Asia's Midday Market Watch. I'm Jeffrey Halley and it's the 20th of February 2024. Today's guest is Zhang, Head of Equities at First Plus Asset Management. Jiang, good afternoon.
Thank you, Jeffrey. Thanks for having me.
We're very excited to have you here because you've had a very interesting trip to China. Now, before we get to that, let's just take a look at regional stock markets around the region. It's a pretty quiet day in Asia, despite the fact that China did cut its 5-year LPR today. And I think most of that is because it was a US holiday yesterday, not a lot for Asia to get its teeth into. Looking at the Nikkei 225, down just 0.26%. Shanghai is almost unchanged, despite that LPR cut in the 5-year tenor. Hong Kong down 0.3%. S&P ASX 200 in Australia down 0.15%. South Korea's Kospi has retreated by 1.25%, the main mover today. Singapore, the STI is up just 0.07%. And in Kuala Lumpur, the KLCI is up 0.52%. Pretty quiet day in Asia today. So let's talk about your China trip, Jiang. You've just returned from a 1-month fact-finding trip to China. In that context, could you perhaps share your views on China's government policy direction as you see it from that trip?
Mm-hmm. Yeah, Jeffrey. Thank you very much. So, we spent the past month and a half traveling all over China just to try to understand the investment narrative for China this year. Our conclusion is that we think China's macroeconomic recovery is likely to be longer and more gradual than we previously expected, which means that China is unlikely to see a structural bull market unless the policymakers roll out a more comprehensive and robust measures. Yeah.
Okay, that's a very interesting perspective. You've also spoken to company executives on the ground in China and also onshore fund managers during your trip. What themes emerged from those discussions?
Well, so we spoke to dozens of companies across different industries, and the overall feedback is that corporates are becoming increasingly cautious with the broader business environment. So this is a stark contrast relative to, say, 6 months ago, where they were generally more positive about the macroeconomic recovery. And I think for most of these corporates, they're starting to get used to the new so-called the new norm. And this is particular, I would say, pronounced for companies that have a large exposure to the Chinese domestic market, and for the companies that have, say, more exposure to the global market, seems to be faring a little bit better. So this is more on the corporate side, and on the fund manager side. So on the investment fund manager side, the sentiment gap between the local onshore managers as well as the offshore managers seems to be narrowing. Now, this is actually very interesting because previously the onshore managers have largely been very positive about the prospect of a policy change, but now they're starting to become increasingly cautious on the outlook for China.
So given that there's been really a constant procession of negative news from China in recent months, and in the context of a very poor, to be honest, stock market performance, is China really still investable in the traditional sense? And if so, what strategies do you believe are the best fit for the current environment?
Mm-hmm. Well, see, that's a very good question, Jeffrey. China clearly has its challenges, but at the same time, so my recommendation is that we don't think investors should simply bottom fish based on low valuation alone, given the broader macro context. So I think investors are better off looking at selective growth strategies, specifically global growth, as well as attractive valuation and dividend yield. So these are 3 themes that we actually particularly like.
Okay, in that context again, given that you believe that China is a selective investment environment right now, I guess the million yuan question for our viewers, Jiang, is which sectors and companies are potentially worth following right now in mainland China?
Well, so there are like three different themes that we particularly like here at First Plus Asset. So one of them it would be cross-border e-commerce. This is one vertical where we see Chinese companies can leverage the strength of the overall China supply chain in delivering value for money items to the global consumer market, while at the same time expanding the total addressable market. So companies like PDD Holdings and to a certain extent and Alibaba are really well positioned for the theme because they delivered a superior value proposition relative to the incumbent retailers, both online and offline, while subject to a lower regulatory risk relative to some of the internet technology companies. So this is one sector that we actually like. And another sector that we particularly favor is the China's education sector. So education sector is becoming increasingly, I would say, a positive regulatory tailwind. And under this broader context, we like a new Oriental education. The ticker is a EDU, and mainly because the company has a very good brand equity, very visible growth trajectory, and also solid management execution. So that's the second theme that we particularly like. And finally, I think from an income perspective, we like telecommunication and energy. And this is really a function of low valuation as well as attractive dividend yield. So I think this particular vertical is more attractive to the income-seeking investors.
So not across the board bottom fishing, but perhaps selective bottom fishing with regards to that last vertical.
Exactly, yes.
Okay, finally, Jiang, you've spent a month in mainland China and you've probably got a fairly good grasp now of what the real situation is like on the ground. What policy initiatives would you like to see China take to move the needle in a more bullish direction generally for China investments as a whole?
Well, ideally, we would like to see the government to hand out stimulus checks to the Chinese consumer, but I think that would be a tall ask.
Mm-hmm.
So, realistically speaking, we would like the policies to focus more on consumption as opposed to the other fixed asset investment. So anything that focus on wage growth, consumption, job creation, this is something that we like. Another thing would be creating a more pro-business environment. So now keep in mind that private sector is the source of innovation and employment. So this is very important when it comes to future economic trajectory. And finally, last but not least, I think the geopolitical tension, downplaying it or having a good relationship with the U.S. as well as its allies are also very important for China to regrow its economy, because the risk of marginalization would be severe in our view.
Right, wonderful. Look, Jiang, thanks so much for your insights today. I'm sure our viewers have found it fascinating.
Well, thank you very much, Jeffrey.
We've been speaking to Jiang Zhang, Head of Equities at First Plus Asset Management on BizTech's Asian Midday Market Watch. I'm Jeffrey Halley, and this video and podcast will be available on our website, www.biztech.asia, also our social media platforms, as well as our syndication partners, TV and radio stations and websites. Please like and subscribe to the various platforms, and thanks so much for tuning in.